Good morning, everyone. It's 11 o'clock. We're going to wait a few more seconds to let a few more participants jump on here, and Stan will jump into it.
How are we doing on attendees, Tony? Should we get started?
Yeah, go ahead, Stan.
Okay, all right. I just want to welcome everyone to the HW&Co Fraud and Forensic Deterrence Seminar. I'm Stan Olejarski. You just heard Tony LaNasa. Tony is the leader of our Forensic and Litigation Support Group. Many of you, I saw the names of those who had signed up, at least prior to today. Many of you have attended seminars that either Tony or I have presented, most notably for OSCPA. Some of the names were familiar, some of the people were familiar, and you probably have attended similar type presentations about fraud avoidance. So we're going to try to make this one a little bit different, maybe from what you've attended in the past. We're not going to give you all kinds of facts and figures and graphs about who commits frauds and why and how it happens. And well, how it happens, we're going to go over for sure. But it's going to be more of a practical session that's designed to help you in your business. And we're going to go over specific cases that I have investigated personally and have a good background of those cases. I know what happened. I know why it happened. I know what could have prevented it from happening. And we're hoping that you can use that knowledge to in your businesses to see where you're at risk, and perhaps these individual things might not happen in your business, but other things could. And the whole idea of it is for you to do a business risk assessment. It's absolutely critical, and determine where your company's at risk and where your company needs controls or enhanced controls.
Okay, thanks, Dan. Just some housekeeping items here. So, we are offering CPE for those that need the CPE hour. It is an A&A hour, so audit hour, accounting hour for CPE purposes. Now, you do have to answer the polling questions during the session. So we do have 3 polling questions. If you're having problems answering the polling question, just try to get out of full screen mode and you might be able to answer the questions. And then at the end, when it closes the webinar, you'll see a survey that pops up. Please complete the survey, provide some feedback to us if there's any feedback you want to provide. It gives us some information that we can enhance any future webinars that we put on. Questions, there's 2 ways to post questions. You can just raise your hand and ask the questions, or you can just post a question in the question screen within the GoToWebinar screen on the right side. So either way is fine. We'll try to answer questions as we move through the session today. If there's any questions that we have left over and we can't answer, we'll answer after via email. And then lastly, handouts. If you look at the same screen, there is a drop down for handouts. There's a handout for the actual notification for the CPE. So if you want to pull that down and print that or save that in your files, you can. And there's also the PowerPoint slides as well that you can pull down and use at your leisure. So just, I know Stan alluded to kind of what we're doing today. So, what we're going to go through is just some background initially for occupational fraud, some information on that. As Stan said, we'll talk through 5 cases. As you said, these are real cases that he's been a part of over his career. We'll talk through that. And the main items for that is, really what went wrong with them, how they were detected, and then, really the important piece of it is what could have prevented it, minimized that fraud from occurring. So we'll kind of go through all that, and it should be good information for everyone, like Stan said. We have our first polling question that'll get posted here. In your business career, have you ever come across fraud? We'll give it about 15 seconds here for everyone to answer the question. Again, you have to answer the questions to get CPE here. Okay, we have about 93%, 95% participation. Give it a couple more seconds. Okay, we can close the poll.
Oh, that's interesting.
That is interesting. Look, it looks like about almost half the audience has encountered fraud in their business career. So,
A little more than half.
oh yeah, more than half.
Okay.
There you go.
Okay. All right.
All right. So maybe some of those can provide some cases along with us, Dan. Huh?
I'd be happy to talk to anybody who wants to discuss them. It's kind of a perverted hobby of mine, actually. But okay, let's just get into a definition. We're going to talk about occupational fraud. We should know what we're talking about. This is as you see, it's personal enrichment through the company's assets. You're the hand in the till, as they say. Could be cash, inventory, supplies, whatever. I mean, we're not really talking about a roll of Scotch tape at Christmas time, but technically that would hit the definition. The down at the bottom left, go back to that slide, Tony, for a sec. Down at the bottom, the source of the Association of Certified Fraud Examiners. That's their site. Every 2 years, this group is a good group, puts out a really nice report. Very easy to read, a lot of facts and figures, a lot of charts and graphs. You can get through it pretty easily. If you've ever seen this, the last one is 2020. They do it every 2 years. And in my opinion, I don't know if Tony agrees, but in my opinion, it was more meaningful when it was just the United States and Canada. They made it an international document, which kind of skews some of the numbers. But at any rate, it's very good. And I would suggest if you have a chance, you take a look at that document. This definition is from that document.
And they're actually doing surveys right now, collecting surveys currently right now for the 22 report. So that the 22 report will come out next year.
Right, it comes out in like May, Tony? May, June?
Yeah, I think it's in the spring. Yeah, spring of 22.
Yep. Okay. Okay, the first thing you need to know is there's no particular group that commits fraud. It's all the groups commit fraud. Okay, all groups, all genders, all age groups, management. Frankly, management usually can commit frauds of bigger amounts because they have more opportunity at some of the bigger numbers. All positions in the organizations. And the last one is all industries, including nonprofits. In my opinion, I would say maybe even especially nonprofits. I know we've got some nonprofit people on the call this morning, but there's an issue with nonprofits, and one of them is they do not want or need negative press. Now, nobody wants negative press, but nonprofits do not need their donors to know that somebody's stealing their money. So they tend to keep it quiet, and which has bothered me over the years, they tend not to prosecute. Sometimes they don't even fire the perpetrator because they feel sorry for him. There was a reason. There's some thing that somebody can come up to justify to not even fire them. But nonprofits, I think, are particularly susceptible to frauds. Although that's not in the. I don't think AFCE breaks it down by profit or nonprofit. I wish they would. But basically, anybody can be stealing from your company. So keep that in mind. Okay, there's 3 absolute requirements for a fraud. You don't have all 3, you're not going to have a fraud. It's need, opportunity, and justification. Need it's not a want. Everybody wants more money. We're not talking about wanting more money. We're talking about needing more money or whatever have you. Gambling, drugs, alcohol, any kind of addiction. Significant financial distress, maybe mortgage foreclosure, spouse lost their jobs, children dropping out of school, moving back home, whatever have you. But it's got to be significant financial distress typically. And honestly, the number one in past several years has been extramarital affairs. Interesting. They, if I don't want to say if you're familiar with them, but if you are, it requires cash and it requires, you can't exactly put those things on credit cards. So the need is an important thing. There's opportunity. The definition of opportunity is the first bullet point on your screen. It's the belief that one's actions will not be uncovered. That's easy, it's technical, it's simple. That's what opportunity means. In my practice, I've added the other one. Or if uncovered, not prosecuted. I had a case where we caught the guy red-handed, and I was speaking with him, and he was pretty brazen about it. And he said, and I said, well, you know, they're gonna fire you, they're gonna prosecute you. He goes, well, they'll fire me. They're not gonna prosecute me. I said, yeah, I wouldn't be so sure. He said, I have so much on the owner of this company that he wouldn't even think about prosecuting. I said, okay. He was not prosecuted. All right. So I just, if I mean, again, that's more opportunity if you think you can get away with it, or even if you're caught, maybe you don't care. You just go get another job. The last one is justification. All right. I wouldn't count on this one. All right. Some people can justify just about anything. Those are the people you see in the news every night. They can justify just about everything. Others cannot justify stealing no matter what. It's immoral, it's unethical, it's whatever have you. And everybody else, which is the vast majority of people, are what I call situationally honest. Situationally honest means given a certain set of circumstances, they would at least consider stealing if they absolutely had to have the money. I mean, I could spin a tale. I've done this. I actually did this in a presentation one time, and somebody in the front row was crying. So I guess I hit too close to home. But there's reasons things can happen in your life with children, with medication that's not covered by insurance. People can justify it if it gets bad enough. The majority of people. Okay, so you need those three things. Those three things. Importantly, this is really important as an employer. Okay, the only of those three requirements you can control, the only one you can control is opportunity. Period. You can't control need. You can't control justification. We all try to hire honest people. We all think we hire honest people. No matter what kind of background search you do, it's not enough. Okay, so opportunity is what you need to control.
Thanks, Dan. You know, along those lines on the opportunity side, you know, I think, you know, we're really focusing on that obviously here, just because again, as Dan said, as an employer, you know, this is the only thing that can be controlled, can be changed, or can be enhanced by an employer to potentially reduce the risk of what we're talking about today, of these cases and of this fraud. So, you know, some of these opportunities, you know, relates to systems, it relates to procedures, it relates to processes, it relates to personnel. There's a lot of things that an employer can control. You know, like say, hey, you know, you have, you know, a lot of the industry, a lot of businesses right now are having staffing issues, right? So, you know, I assume a lot of businesses are trying to interview, they're trying to bring, you know, good, competent people in. And, you know, one of those things that all businesses should be doing is background checks, right? So, you know, that's where you can control what type of people are coming into your business and handling your assets based on looking at their background. Now, I know Stan's going to say, well, sometimes those background checks come back nice and clean, and potentially they had some issues in the past that have never been really you know, communicated and on their background check. So that's obviously another additional risk there. But that's one thing that an employer can do initially when they're trying to do some hiring, is do a background check that they can control how or who is coming into their business. You know, checks and balances, obviously, you know, internal controls related to the review process, the oversight from the C-suite, from directors, officers, very key. We'll talk about that several times today, about oversight. we talk to our clients a lot about if you're changing personnel, if you're changing procedures, you still need to maintain that oversight. Even when someone is working remotely at home and they're doing a lot of the duties they've always been doing at home now, which I think a lot of us would tell you that probably increases the risk a bit with fraud. You need to have that oversight overall with that process. And then again, in the end, this is all relates to internal controls. The ACFE and their report to the nations that Stan talked about, one of their statistics that they come out with relates to what weakness the case, the fraud case occurred with. And the predominant weakness that comes up is internal controls, that lacking internal controls overall in the business. So we'll talk about risk assessment for businesses and what they should be doing on an annual basis, but that's very important, as Stan said, to really assess the business, not only operations, but also the accounting, business office, and what procedures are in place to really reduce that risk of fraud in the company. As I mentioned, fraud risk assessment, very important for a business to do this. We say annually, but I think you just need to kind of assess it periodically, especially when businesses change, either personnel, change procedures, change duties. Really need to assess overall what's going on with the risk of fraud in the organization. And what really occurs with doing that is just asking questions with your personnel, with yourself, just asking questions about, okay, what can happen to our business? Can the accountant, can the controller conceal an ACH and the bank account without really anyone knowing? And that person does the bank reconciliation at month end as well. So can that be concealed for months in and out? So just questions, asking yourself and others in the business, what can happen, and then obviously, once you get through that, then responding obviously to those issues, and really prioritizing those as well. And there's always a cost benefit, right, to all of these internal controls that you put in. So, if it's not really meaningful to the business, if it's not material, significant, why put a lot of resources towards it compared to something that would be very meaningful, very, significant to a business where you absolutely need to have some sort of internal controls on that duty or procedure. And then, before we get into the cases here, the two types of internal controls are preventative and detective controls. Preventative controls, really, is what it means is it prevents the fraud from occurring. So you have an upfront control or procedure in place that prevents it. And you can see, segregating duties. So you have more than one person doing different duties where it segregates the issue. Review processes before the transaction occurs. So someone would see something or see an issue happening before it occurs, and then having approvals, authorizations. I see a lot of our clients now doing electronic approvals, with invoicing and things like that, which is great. Things like that would prevent something from occurring, either a check being processed that should be processed to someone, or something else. Then the detective control, again, I'm not saying a detective control is a bad thing. It still could be good for a lot of control procedures, but a detective control is something after the fact, where someone's reviewing something, or someone's doing a month-end procedure and then detects a fraud that did occur, either in the bank account or somewhere else. So you can see some of those examples there. Bank reconciliation process, monthly, month-end processing and closing, definitely a good control, detective control. Reconciling all your bank accounts and balance sheet accounts and making sure those are all tied out. Reviewing W-2s and so forth, very important overall. And we're not saying it's a bad procedure, it's a good procedure. to have. And again, you have to kind of weigh the cost and the benefit to all of these and prioritize some of these duties based on the resources a business has.
Well, Tony, I love detective controls. I mean, you may not be a big fan, but I love detective controls because the biggest complaint clients give for not having a good system of internal controls is it's too costly. Detective controls can be very, very efficient. You're batching data. You're doing analytical review. You're using your computer system to extract data to say, that doesn't look right. And you're going to catch it, but you're going to catch it early. Even if it's already occurred, you're going to stop it. That's the most important thing. And that's what we're going to see in these cases, that these frauds, many of them very simple, nothing to them, and yet they went on for years because either there was no detective controls or there was no monitoring. Now monitoring is underutilized and underrepresented. If I contend if you don't have monitoring, you don't have controls. If you don't have monitoring, you don't have controls because people will stop doing things the way they're supposed to do them if they're not being monitored. They'll shortcut, they'll take an easy way out, they'll just not do this because they have to walk across the room to do that. It's just they'll find all sorts of reasons to avoid the stated internal controls if nobody is following up on those. Okay, well, let's get into case number one. We have 5 cases here. This one is I like this one. I forgot which one I put first. This is the professional corporation, multiple partners, traveled often, very often out of the office. Perpetrator was a female in her late 40s, over 20 years with the companies. She was the firm administrator. Described as a hard worker, very certain nobody could possibly think that she would do anything, worked a lot of overtime. By the way, that's common because it takes time and it often has to be done after hours to cover up your fraud. Okay, this is an interesting group again. The egos of this bunch could fill any size room. Okay, that was part of their issue. They had they all decided they should be check signers because why wouldn't I be a check signer? Why would he or she be a check signer and not me be a check signer? It was the key part of how she was able to do what she did. But they had a policy. It was their open policy to charge as much as they could on credit cards. And that's not surprising. A lot of companies do that. They do that to get free miles, perks, or cash back, or whatever else they're getting. And so the perpetrator, who was very, very meticulous, very detailed, would provide the documentation for the check with the check to be signed by one of the partners, and everything tied out. If anybody looked at it, it tied out to the penny. There was no issues. Everything was perfect. So then that person who signed that check would be out of town or in the field, if you will, and she would take the same or slightly different documentation a few days later, a week later, 10 days later, to another check signer partner. And that person would go through the same stack or slightly different stack and say, yep, this all ties out. I write a check and both checks are going to MasterCard. They have 5 or 6 MasterCard, Visa, American Express accounts. And she would take that second check and pay her personal credit cards. It's really fairly clever. Right? And it didn't tie out to her balance, but she always carried a balance, and that the payment ended up always being processed. All right, it's really not a bad idea, and it should scare you. I mean, the big problem here was that multiple check signers. So Tony, what went wrong here? Tell us.
Well, I think we go back to the opportunity first, right? So,
yes.
So what was the opportunity here for her to commit the fraud? You know, I think, as you said, there was an opportunity because there was multiple check signers, and those check signers didn't know what the other check signers were signing, right? So that was the opportunity. You know, she found it and she committed the fraud because of that. So you can see, you know, there were several things, several factors here that were an issue. You know, and I think, you know, the couple things that really potentially could have prevented this, I wouldn't say prevented it, but maybe potentially minimized this fraud or this risk, One of them is, well, what's the preventative control here, right? So, like you said, probably the better control is preventative, but is it, you have to look at the cost of that prevention, right? So what could have been implemented on a prevention side to potentially reduce the risk here? And I think one of those is the check signers, right? So like, hey, take a look at your bank account when you get back to your business, or obviously if you're in your office, take a look. How many check signers do you have on your bank accounts right now? Do you need 4, 5, 6 check signers? Probably not, right? So take a look at that and see exactly, okay, well, is that something that's needed? Do we need, CFO and controller and, president and board member and so on as check signers here, where potentially there could be some issues like this, like happened in this case here. So, that would be the preventative control, is reducing that risk by reducing the number of check signers. Also, I know a lot of controls and some of our clients, they have two check signers for a check over a certain amount, right? So just, thinking about that, well, that could be a control there where you have 2 check signers for one check over a certain amount. So that would be something that would be preventative. However, as Stan will say, there's a lot of ways to get around that, where fraudsters see that threshold and then just write checks right below that threshold. So there's things that a business needs to think about overall. But then thinking about detective controls, maybe preventative controls doesn't work here, and you kind of think about, okay, what kind of detective controls we can add to prevent this. Really, I think in this case, having someone outside the business office reviewing canceled checks, and I think in this day and age, everyone has online access. So, reviewing canceled checks, and why is there, 2 checks going to American Express in the same month? Or, typically we only send 1 check. Why is there 2? Things like that come up. You can also do some data mining here with the payments, and you can bring up, how many checks are going to certain vendors each month, each year. Why are 50 checks going out to American Express in this year? And typically we should just be sending out one check a month. Things like that a business can do, and it doesn't take very much time, where you can just kind of data mine some of the information you have, some of the transactions, and get a lot of good information out of it.
She was pretty clever in that she had, I think at the peak, 7 or 8 different credit cards. One had better miles on United or whoever. Somebody had a better thing here, and at Discover was better cash back. She was pretty clever about it, I have to admit.
And then, if you think about it, well, how was this detected? Because obviously, it was found. So it was by accident. It was a partner that was just questioning the number of credit cards they had and so on. And as you can see, this fraud went on for 8 years before they figured this out, that this business was paying on this fraudster's personal credit card, right? So, pretty interesting. Again, by accident is one of those things where you look at the reports of the nations from the ACFE, and by accident is up there, right? So, we'll talk a little bit more about that with, how things are detected, but by accident is one of those things where you do see it, just by accident, someone asks a question and, it gets found. So anything else, Stan, on this?
No, I don't think so. Other than, as it turns out, her need was a little unusual. She and her husband had an uncontrollable spending fetish. They just bought stuff, shoes and junk and teddy bears and all sorts of unusual. That was her need. That's a little bit different. All right, let's go to case 2.
And that comes back to, we'll talk about red flags. I think every business owner should be really looking at, is there red flags in the business with people Now, I know it's going to be a little harder if people are working from home. You don't really see what's happening. You don't have in-person conversations with them. So you're not really digging into their personal lives and just asking questions. What'd you do this weekend? Oh, well, we flew to here, that we, and so forth. And well, then you kind of you go back to your office and ask, well, how did they afford all this, all these vacations? And, so it comes back to some of that where, if there's a red flag and you're kind of uneasy about something, you probably should, do something about that. Okay. Because you don't want something, again, like in this case, a fraud to occur for 8 years and, lose all those business funds.
Okay, case number 2, titled Time for a Raise. A for-profit corporation. She was a 3-year person when the fraud started, did it for several years. She was an internal accountant and she was salaried because she was degreed. Whether she should have been or not, it's not now that important. Interestingly enough, of the 5, she was the nicest one. Really quite nice, and a really very nice person. It surprised me that she would steal from the company. For her scheme, again, the simpler the better. They're not trying to teach you how to commit fraud, I'll teach you how to catch fraud, but this is a very simple fraud. She was in charge of the payroll. They use an outside payroll company. She called in the pay. Well, she didn't call in the payroll. You do it all electronically now, and she would just process the payroll. So all the employee checks were required to be automatic deposited, so there were no live checks. That was critical. They changed that during her period, and when they went to no live checks, the business manager, the office manager, changed her. She did, not officially, but she changed her reviews because there were no more live checks provided. There wasn't an issue. So the perpetrator in this case just clicked the button, and she was doing online, and made herself from an exempt employee to a non-exempt employee, and she was subject to overtime, which she charged in some of the payrolls. She was pretty clever. She knew when the office manager was going to be busy, typically at the end of the month, or when she was going on vacation, or when she had a particular project she was working on, and she would hit those particular payrolls with some overtime and with unused vacation, which was used, but she'd put it in as an extra 80 hours of vacation time. And she also paid herself some bonuses. Actually got a fair amount of money overtime here. So pretty simple plan. It didn't take much. What happened here, Tom?
Yeah, so as Stan said, you hear about, this person being busy. That typically reviews the payroll, right? So, what happens there? Well, that control was in place, right? It was documented. It was in their procedures. You had this office manager reviewing payroll, but again, they're too busy. They can't review it this time. So let's just have the person that processed the payroll approve it. So that's just what that calls is, what that's called is overriding the control, right? So, we as auditors of financial statements, we look at that we focus on overriding controls. We try to understand the client. We try to understand, we understand their internal controls, their processes, but then we ask a question, well, how can controls be overridden? How are they? Is there a person in the C-suite that typically thinks controls are just too much? Let's not follow this. Let's get this check processed. Let's not put this check through the normal process that we have, because we got the vendor in the lobby right now that needs the check. Things like that can occur where you're really overriding the controls that are written. And typically people in the business office or other offices don't really know they're being overridden. So that's the major issue here, where that person didn't review the payroll, and the payroll person got additional compensation with overtime and through vacation and so forth. So again, you're thinking about the opportunity here. Well, that's the opportunity, and she took it. She saw that this person wasn't reviewing payroll for certain pays because they were too busy, and she frauded the business with what she did. So some of the controls that potentially couldn't be put in place, obviously there was one already there, and it wasn't occurring. So that's one of the issues. A preventative control would be potentially additional approval. Maybe, maybe that office manager just thought it was taking too much time to review payroll manually, going page by page. So, is there a better way to do that? Is there maybe an automated way or electronically where this office manager can get it on their phone, can get it on a tablet where they can review it, things where it may just make it easier for the person to review the payroll on an ongoing basis. So something to think about with that. Detective controls. The one detective control that I thought of here was just a easy, normal comparison of budget to actual, right? So looking at your salaries and wages and, reviewing the actual numbers that are coming through, specifically overtime, and comparing to what you thought, what the budget is or what you expected the budget or the salaries to be. That would be a very, very key detective control here. And I guess the key here too is having the right people review that information as well. And as well then having questions back to the payroll person or accountant related to some of the fluctuations that people are seeing with those items. So I think a couple items there that, I think a lot of businesses, a lot of our clients are already doing. But again, you may want to take a look at it and, is there potentially enhancements that you can do? Maybe you make some changes to some of that. Some of the controls are already in place. Or if people think that it's maybe a little too burdensome, maybe you can, change or electronically change some of the review process to make it a little easier for everyone.
Yeah, I guarantee you're underutilizing your computer system. I guarantee it. The one thing I wanted to touch on was that W-2s. It just has to be done. You should be looking at W-2. Some of you have 5,000, 10,000 W-2s. I understand it's a little harder. Most of you don't have near that many. You should be looking at the wages and what is the person's position. And person is a nursing home aide making $120,000. How does that happen? Okay, there's an issue there. What are the especially the accounting and bookkeeping roles? You should be looking to make sure everybody has federal withholding, that you don't have tax dodgers and objectors. You don't want those, and that they all have legitimate addresses. The W-2 should not be going to post office boxes. Just a few things to look. It takes very little time, and it amazes me as to how many people don't do it.
We
Okay.
had a question.
Yes.
Sorry to interrupt. Were they able to calculate how much she had stolen?
Well, in every case, we try to define it, and that's what our role is, to come in and take a look at it. I don't remember in this case how much she stole, but she was padding her payroll by anywhere from 40 to 60% per year with this with this scheme.
Okay. And
again,
then
this was detected with an employee tip. And I just, you really should be asking your employees. Employees may or may not care about your company. Employees may or may not care about the owners. Employees care about fairness. Okay, if they know somebody's stealing and they're getting away with something that they're not, and maybe their raises and bonuses are down as a result, they want to tell somebody. So give them a chance. Let them tell somebody. Maybe put in a system where you have tip reporting. We're going to talk about that later, I think, Tony, right?
Right. We have a polling question right now, I think. Yeah.
Oh, good.
So,
okay.
Does your company have a fraud tip hotline?
This could be internal. This could be external. Somebody internal to the organization that they're supposed to report fraud to. Somebody, an outside source that they could contact is the other option. And it goes in your personnel manual, and you tell people that's part of their job. They go from tattletales to doing their job. Very effective.
Yeah, we work with a company, and if any of our clients need a referral to a company with a tip hotline service, this company is called Red Flag Reporting. They work with some of our clients, and it's just like that. It's just, a tip hotline. There's people that review those tips that come in. initially, and anything that needs to be followed up with, they communicate that to the appropriate person in the business.
Okay, we have about 20 minutes left. We want to make sure we get through this.
Yep.
So let us move on. Okay. That's not enough. Let's do an employee tip hotline. If you're not sure, the answer is really no. Okay. All right. I love eBay. All right. For-profit manufacturer, fairly good size. Purchasing manager in this case had a major problem with gambling, as I recall. He was there a long time, key employee. He was in charge of all purchasing. Go to the next slide. The work was always documented. We got multiple quotes, did all that stuff. One time he made a mistake, honest mistake. He ordered, I think it was paper. He thought he was ordering reams and he was ordering cases, and he way over ordered, and he didn't want to embarrass himself, and he didn't want to send it back. So he hid the excess in a storage room and nobody noticed. What was that? That is a classic definition of opportunity. So he realized if he could do it by accident, he could do it on his own. And he started buying extra things and sending them through we all may not know it, we all have a ready-made fence. We don't need a fence anymore, a person who takes the goods and sells it. We have eBay. We have, I don't know if Craigslist is still around. He was using Craigslist at the time. And he's buying this extra stuff, selling it on eBay and Craigslist, and putting that money in his pocket. I got pretty creative with it, actually. At some point, he actually had the shipments sent directly to his house. So that took care of getting it out of the business. And the thing the owner got the most upset about is that he was doing it on company time using the company's computer. That's what he was most concerned about. So it may not affect all the companies, but if purchasing is an issue, purchasing fraud has been on the increase, again, because of eBay, Craigslist. You can buy anything on eBay. It just amazes me. I look at those things and I said, how does that person have that to sell? So Tony, what went wrong here?
It's the controls obviously in place. There was no oversight, with the purchasing function. There's no authorization, no approvals, no one overseeing that person in purchasing. That was the major issue. Are there purchase orders that are being done by department heads and others? How is that funneling through the process of purchasing? Once they receive the supplies, no one in this case, no one's comparing purchase orders and receiving lists to receiving lists, of the product that was received. So, that's the issue, because obviously, if you have a purchasing agent that's making purchases, then half of the supplies are going to their personal residence. There's obviously an issue there that there's no comparison of the purchasing amount and supplies and the quantity to what they actually received on hand. So, issues there for sure. I think some of the controls that could be put in place. I think a key one here would be, again, as I talked about last time, budget versus actual. Why is the supplies account 50% higher than what we expected it to be this month? What's going on here? Making sure that you're looking at that and, again, asking questions on why this stuff is not what we expected. Going back to the data mining, doing some data mining of your expenses, making sure that it's appropriate based on, your expectation of the supplies that you typically get, the number of supplies you typically get, so on and so forth. So, but I think overall, Stan, I think in this one, it was really just the oversight of that purchasing purchasing function.
Absolutely.
And
we go to the next slide, the last part of that next slide is telling. The controller told me this could have gone on forever if he would have kept his purchases to a lower amount. Most times, fraudsters get greedy and keep doing more and more and more until they get found. But if you don't think this has relevance to your business, I would venture to argue with you. If let's say you're going out and buying 18 computers, because we do that all the time. Every 3 years, we redo the computers and the stuff. What's keeping our purchaser of the computers, other than we have controls, but what's keeping them from ordering 20 when we need 17 and selling the other 3? I don't know that if that's happening in your organization, and you should. All right, let's move on to case number 4. All right, we have a nonprofit here. Now this one may not go through this quickly because this might not affect everybody as much. We have a male, doesn't matter. The only reason I put that in there is to show it's male, female, doesn't make any difference. Controller had access to all the records. They had a separate building account, and the nonprofit, the board would approve so much per month to go into this building account, and the controller was able to overfund it. He overfunded this account, and then he would take checks out of the account. Very, very simple fraud. One horrible weakness is that if it was detected, he had absolutely no plausible deniability. So he knew when he was caught, if he got caught, he was guilty, and there was nothing that he was going to be able to do about it. But the company was audited. He knew what the auditors did as far as their materiality limit. It was around, as I recall, it was $2,000. He never looked at a check under $2,000. He didn't take any chances. His lucky number was 8, and he'd write a lot of checks for $850, $875, $810, 8 whatever. He wrote the checks out of those accounts. He was an authorized signer. He signed it, paid it to himself. Simple, wrong as could be, but that's the way it was. So this is what he did. A lot of you may not have separate accounts, but a lot of you do. You may have separate executive payroll accounts, for example, or attorneys have IOTA accounts. They're required to, which is client funds accounts. Nursing homes have patient funds that are often in a separate segregated account, and it could happen to you, although it probably doesn't have as much relevance as some of these other cases. So again, failure to monitor the cash accounts, lack of segregation of duties, lack of monitoring of the building account. Let's look at how it was detected. This was interesting. The bank was their friend for a change. The bank came in and said there's a lot of volume coming from this account that is designed to not have a lot of volume. And he, I believe the banker was a he, contacted the executive director, and the fraud was uncovered, and that was the end of that.
Yeah, Stan, on this one, I think the issue, there's a couple here. The check signers, right? Why would he be a check signer on just this building account?
Correct.
You know, why is that? He's in the accounting function. You need to segregate that. That's an issue. Maybe people didn't know. Who knows? Maybe he put himself on it. I guess we don't know. But you know, that was an issue. And then why do you have all these different bank accounts? You know, like, was it very necessary to have this building account, this separate account that potentially could get manipulated because you have to reconcile each month, and maybe some of the C-suites, you know, some of the higher level people don't even know it's there. So again, looking at that you really need, you know, you definitely need to have probably more than one operating account, but is it necessary to have 2, 3, 4, 5 bank accounts where potentially you really don't need all these accounts?
But in this case, it was so obscure, and the auditor, who was not us, the auditor did not even look at that account apparently, because if they looked at the account, they would have seen these checks for $800, and this was the building account, supposed to be for capital improvements. Why do we have checks for $820 and $850 and $875 going through this account? Which is what the banker ended up telling to the executive director and how he got caught. All right, case number 5. This one's interesting. This is an international public company, very, very large company. Male and the perpetrators, plural, male and female sales force from the Northeast. The Northeast is nothing but trouble. This company expected their top salespeople to wine and dine their biggest clients. The clients expected it. The company expected it. They're very, very significant expense reports, including business entertainment. The expense reports, this is the serious flaw, were submitted electronically. That's not a flaw. That's fine. And this was, this was 15 years ago at least. So it was kind of cutting edge to do that back then. A lot of people are doing it now, including us. The documentation was only submitted upon request of the sales manager. Unfortunately, the sales manager didn't want to rock the boat because he got an override commission on their sales, and their sales were extraordinary. They led the United States, their region did. So the sales force exaggerated expenses, sometimes made them up. When they had a turnover and staff turnover, they didn't have much because these guys were making more than they were supposed to be making by virtue of their helping themselves to the expense reports. But the new hires would be indoctrinated very quickly into the program. They would say, well, this is just part of this is the way the company works. This is what we do. You don't tell anybody because of IRS regulations, but everybody does it. It's expected, and it's part of your compensation. I'm not sure this could happen in a lot of the people who are on this call, but did want to bring it up. So Tony, what happened here?
Yeah, I think again, having procedures not in place related to expense reporting, right? Having maybe some special procedures in place for different regions of a large company. Obviously issues with overall management, integrity, ethics, all of that. I'm sure maybe this company potentially didn't have, their annual, fraud training and fraud prevention kind of, talk and ethics and integrity and all of that. That's potentially an issue there that all businesses should be having on an annual basis. I think one of the issues here was, yeah, maybe there's receipts, but do you know what kind of receipts are being received? Are you getting full and complete receipts? We understand that, and you can't get, for all expenses, you can't get receipts for everything. We understand that, but for an airline ticket, for meals and things like that, potentially, why aren't you getting receipts? Why is someone not reviewing those receipts, comparing to their expense reports? Major issues there. So then, like a detective control here would be, again, just looking at transactions, looking at expense reports, the expense amounts on the books for travel, for entertainment, for meals, like what's going on here? What's the expectation of it? And, what's the actual amounts that are coming through? Now, if this has been going on for years and years, what happens then is you're comparing bad numbers, fraud numbers with other fraud numbers, right? So
exactly. But go to the next slide, Tony.
Sure.
And look at that first paragraph. The way it was caught is the way it should have been caught.
Right.
So you have to look at that. If they would have just looked at regional expenses versus regional expenses of the other regions of the country, it would have popped out. The Northeast region was about double everybody else's, at least double.
Sorry.
The reason we were brought in here, we were brought in by the attorney. We were hired by the attorney for client attorney privilege, and the reason was because there was a possibility that they had violated laws of their industry other than IRS laws, which were obviously violated. But that's, yeah, Phyllis, I'm sure you had a question?
Stan, there's a question that we got. So on the fraud case, the previous fraud case, how long did it take the bank to detect the fraud,
It went on for a while. It was not quick. That was a several year fraud. I don't think I have it in the notes there, but that went on for I think 4 years. 4 years. Yeah. And the bank only caught it because he started writing more and more checks. Again, if he wrote one check a month, I think he'd have been okay. But he started writing more than one check a week. And if you're writing 60 checks at $850 a piece, that's $51,000. That's a nice little bonus. That's actually what he was doing. So, and that's why they got it, because there were so many checks.
Phyllis, we have a hand raised, I believe.
Yeah. Yes, I'm going to unmute. Kim, if you want to ask your question, you can unmute yourself. Kimberly? Okay.
Kimberly is shy.
She has her hand raised, and I've unmuted her, but she needs to unmute herself. Oh, she just took her hand up. Okay, I think we're good.
Okay, then let's move on. I mean, this was caught by internal audit. I met this internal auditor. She was a badger. I mean, they told her just ignore it, go away. It's not a risk area, and she just would not. And she caught it and really saved themselves. Well, I don't know if they saved themselves an issue or not. I never got because of the attorney-client privilege, we never got the final indication of what happened there.
Our last polling question: does someone outside the business office review online bank activity and ask questions? right? So, I talk to my clients all the time on this. I know a lot of HW personnel and staff do the same. So, is there someone reviewing bank activity? And the key is asking questions to controllers, to processors of transactions. Just again, getting back to that perception of people overseeing you and then deterring you or others from committing a fraud. So I'll give it a few more seconds here. Okay, we can close the poll. Okay, so it looks like a good portion of your business, there is someone looking at that. Again, it has to be someone outside the business office, most likely, right?
Should be a high-ranking person in the organization.
It could be a CFO that's outside the transactions. It could be, a COO, an operator that knows, what activities are being, what transactions are funneling through the business. But again, I get a lot of pushback on this. I wouldn't say a lot, but some pushback on this from some of my clients because they say, well, that just takes so much time. I don't have the time to do this. CFO person really needs to focus on strategy and growing the company and so forth. And that's understood. But I think this does not have to take that much time. You don't have to look at every check that's online. You look at a handful of checks a month, and then you just ask some questions back to the processor, the AP clerk, the controller, just to make sure that they know that you're looking at this stuff and you're overseeing it.
Okay, we just have 3 or so minutes to wrap things up, and we hope it was of value to you. The takeaways I think you should have is internal controls are critical. I think you knew that coming in. You should control the things that are important. You need to do a risk assessment in order to do that properly. It's critical. Where is your company at risk? What's the likelihood of occurrence? And what is the effect on the organization if it happens? You should have a fraud policy in your handbook, and most of you don't. I guarantee that. It should be simple. Fraud will not be policy. It will not be tolerated. If you commit fraud, you're gone, or whatever it is, but you have to stick to it. It encourage employees to report suspected fraud. And one of the best run companies I ever had the pleasure of working with was an auto parts company, and they sold to a Fortune 500 company. And they their first page of their manual was you cannot steal from the company. If you steal from the company, you're fired. There are no second chances. There are no warnings. This is your warning. And that's what it was. So it was and they stuck to it. They fired people, good people, and we got very upset when they had to fire people because they stole. Now, they also had the best employee policy I ever saw for buying things, because people work in auto parts store work on their own cars. And that was they could buy anything for their own car or their family's cars at cost. And that was the trade-off for them not stealing anything. And it worked. It largely worked. So please do that. You have to monitor. You have to monitor. If you don't monitor, you don't have controls. If you need help monitoring, get help monitoring. We have a number of clients that use us for monitoring their internal controls, not just as part of the regular annual audit, but it's just an ongoing practices. It works. It makes sense. If you don't have the time or resources to do it, it's something that can be easily outsourced, but it's certainly valuable, because an ounce of prevention is worth a pound of cure, as I don't know who says that, a Benjamin Franklin saying, I don't know.
Yeah, I think too, it comes back to risk assessment too, really understanding your business. It doesn't have to take you, weeks and months to pull together a risk assessment. Really asking the questions to your personnel and how, really going to them and ask them, how can you steal? How can you take money from me or from the business, right? So that's what we do for the audit. We go around and interview staff and ask them directly, how can you steal from this company? Well, yeah, I did think about this before, and you know what? I do ACHs, and there's really no approval process for it. So we'll go, oh wait, okay, well, we have to step back then and say, okay, well, although we don't think you're going to steal, well, how can we enhance controls either preventative or detective, to minimize that risk of that issue. Okay, I think
Good.
we're at noon.
Thank you for your attention today. If there's any last minute questions, get them to us and we can answer them privately with you. And please do take a look at our website. There's some fraud prevention. There's a fraud prevention checklist there. And go to the next slide. And there's some articles there about forensics. And in fact, the details of all of the cases we talked about today are in there if you're interested in more information on those. But we thank you for your participation today. I hope you found it valuable, and we certainly hope you act on it on behalf of your companies. Anything else, or are we finished?
I think we're good. Thanks, Dan.
Thank you all.